Hello again, friends, and welcome back to the channel, Giving It All Away. My name is Gregson, and I'm giving it all away. I wanted to start this episode off with a congratulations to Judge Ketanji Brown Jackson. Welcome to the SCOTUS, and also an acknowledgement for SpaceX on another successful launch. Go Elon. So the purpose on this channel, other than positive reinforcement to everybody else out there, is we're here to talk about life experiences, life hacks, and overall lifestyle design, as well as entrepreneurship and wealth building. Today's topic was actually a request from a viewer. It was kind of a lead off from the last video I did on the 4 anchors for financial success. And this is entitled Buying Back My Life, Pursuing Financial Freedom. So these topics are near and dear to my heart, and I hope you find these videos useful or at least moderately entertaining. And I also hope to spark some interest and inspire some conversations. Please be sure to like and subscribe and hit the notify button to be alerted as we release new content. All right, with that, let's get into it. So what does financial freedom look like to you? And how do you achieve it? What would I want to do with my time? And what would you want to do with yours? More importantly, how are you going to get there? This matters for most folks because a good life doesn't come easy. Zig Ziglar said, if you'll be hard on yourself, life will be easy on you. But if you insist on being easy on yourself, life is going to be very hard on you. Here's a little of what I've learned over the years. My personal history. So I was married in my 20s. I married young, and I had a tendency to be a little full of myself. And being in that mindset, I made a lot of mistakes, and I also made a lot of mistakes managing finances and my credit. I claimed bankruptcy back in the 90s because I was overextended with the debt, and I had medical bills. I should say we had medical bills. There was also the foreclosure of a home. There was a divorce, car repossession, judgments. Basically, I spent a lot of time dodging debt collectors. I believe there's a gap in the system. I don't feel like I was prepared for credit, especially credit cards. And I don't think I had the right mindset for managing money. So building credit in the 1980s, it kind of made a shift. It moved away from personal reputation and personal relationships, which was more with my parents' time, and credit became more popularized and commercialized, and the financial services industry as a whole became more depersonalized. So here's a brief history of the credit card and credit score. So there were limited use credit cards back as early as the 1920s. Prior to that, there have been lines of revolving credit. That's been a thing probably since biblical times. But in terms of the modern era credit cards and such, the first universal credit card was in the 1950s, and that was the Diners Club card. In 1958, the American Express card came out along with Bank AmeriCard, which was just used in California. The Bank AmeriCard was later licensed in all states in the mid-60s, and it was renamed in around 1977 to Visa. We all know that one. Next came MasterCharge, which was the name before it became MasterCard. Then there was the Discover card and the Barclay card, and along with many, many, many others. Credit reporting bodies have been around since 1899, which really kind of surprised me. Equifax was the first, 1899. TransUnion was the second, 1968, which was a fine year, by the way. and then Experian in 1996. So as credit became more accessible, lenders and grantors needed a better way to assess folks. Enter the credit score. So what's a credit score, you may ask, or you may not, but I'll tell you anyway. It's a score for measuring creditworthiness. Equifax and Experian use FICO scores, and TransUnion uses the Vantage score. How does your credit score or report impact you? Well, I'll give you 5 examples. The first is loan approvals, right? Mortgage loan, automobile loan, personal loan. It also factors into securing a better interest rate on those loan products or any other line of credit. It will, I want to caution with this, it's not that it will, but it may affect employability from the standpoint, usually it's not the credit score so much as the credit report with that. And I've only heard of this being an issue with like banks or obtaining security clearance, right? So I haven't seen it used widely, but it potentially it's out there. It's also, your credit score or report is used when you set up utility accounts or even cell phone accounts. Those are based on your credit score as well. And then for insurability, they relate your credit score to your level of risk, which affects your premiums, and of course that affects your payments. So here's an example of rules of thumb that are used for mortgage loans. Generally, you have to have a score of at least 500 to qualify for a mortgage loan. 620 or above may qualify you for a reduced down payment, and 760 or higher basically puts the approval odds always in your favor, and it'll help you get the best interest rates. What is an interest rate? Well, it's monies that a grantor charges on monies that have been fronted to cover your purchases, usually in the form of an APR, annual percentage rate, and they are assessed and billed monthly. So an example of this might be if you charged a $100 item on your credit card, and then you go through the cycle end date, and then you've got a payment date. Well, if you only pay the minimum amount on the credit card, the additional amount outstanding on the purchase will then be subject to interest rate. So you take your APR, you divide it by 12, and that's the monthly finance charge. So that's a quick overview of interest rates and finance charges. So are you finding this information useful or informative? Hopefully helpful. So please be sure to comment in the comment section below. All right, let's get back to it. Work smart, live frugally, invest often. By the way, I'm not a financial advisor, nor am I tied to any markets except by role of being an individual investor. Any monies invested are always at risk. All right, with that said, here we go. So a little bit of framework and guidance. For me, a lot of life has been happenstance. It's reading, it's experiences, and it's putting those things to work. I believe in putting in effort and being open to opportunities as they come available. Similar to law of attraction, I use vision boards and I do practice meditation. But differing from law of attraction, I believe you have to actively put energy into a system to get something out of it. So also a few titles I thought I would mention here were Think and Grow Rich by Napoleon Hill, The 4-Hour Work Week by Tim Ferriss, Your Next 5 Moves, which I mentioned in an earlier video, by Patrick Bet-David, The Art of Thinking Clearly by Rolf Dobelli, Essentialism by Greg McEwen, and lastly, A Guide to the Good Life by William B. Irvine. Okay, so here are my 4 rules for financial freedom. 1, never leave money on the table. As opportunities arise to make some money, use them to their fullest. do not exploit, cheat, or cause harm, but always get paid for the value you bring. Negotiate wherever you can, but negotiation is kind of a lost art, especially in first world economies. We don't negotiate often. We go to the store and we buy stuff. We don't really haggle over price. I'd love to try and haggle at McDonald's or Walmart, but I don't think that's going to go anywhere. Worst case, if you're really, really obstinate, I don't know, you might get tased. So it's probably not worth it. With limited opportunities for negotiation, most of us are just not comfortable with it, and we shy away. But you've got to negotiate things like your life depended on it, because let's face it, it does. Rule number 2, considerations for free cash. So maximize your earnings and minimize your expenses. Just live modestly. Trends and brands versus value and mileage. I'm not I'm not cheap, but I am frugal. I don't mind spending money if a product really will wear well, or fit a particular need that I've got. However, I'm not just gonna go out and spend money because I have it. That's just irresponsible, right? Let's call it what it is. So, try and make the most of your cash. Try and make it go the farthest. And the reason being, you want free cash. So let's talk about free cash. So by free cash, what I mean is available cash. And ideally, you want to take this available money and put it to work. Most people aren't lazy. They just lack direction and knowledge for investing, right? Just don't hold on to cash. Put it into an investment account, even if you're parking it at first if necessary. The nice thing about that is it's out of sight, out of mind. So you're kind of able to avoid temptation, and even, emergency spending. Some emergencies are totally bona fide, totally get it, right? But that's just it. We're so easy sometimes to classify things as emergencies that if we would just take a second and pause, we might be able to find another way around that. So that's something to try and keep in mind. Just try and avoid pulling on funds that you set aside. Never, and this is a rule of thumb that I use, or not even a rule of thumb, but this is something that I try and follow. Just never personally lend cash to someone unless you're comfortable with gifting it. That way there's no hard feelings that come with it. It's, you've just let it go because you're a good person. And if you get it back, great. If you don't get it back, you didn't expect it or need it back, right? So try and get with a mindset that kind of lets you and everybody else off the hook, right? You don't want to harbor a lot of frustration there. Another thing you should be doing with free cash is investing in yourself. That is by far the best investment. Learning things, developing skill sets to increase your marketability. Invest in a business, and this could be, buying stock. This could be starting a home-based business. A number of different ways to do this, right? Or you can invest it in any of the other 4 markets that I mentioned in my other video. Your goal ultimately should be to replace earned income with investment earnings, or at least, again, this is my take on it. Rule number 4, after you've replaced your income, or at least a substantial enough portion of it, with investment earnings, create a better work-life balance for yourself and your family. So essentially what you're doing by having a good investment plan or a good strategy is you're earning back control of your time. How would you spend your time? How would you spend that recovered time? What would that do for you? Imagine how much less stress you would be under constantly. That's huge. So as these rules are put into practice, they begin to form a a basis for your new lifestyle. As for myself, my ultimate goals and dreams, I don't think that I even realize what they are yet. My life is just an experiment. I take risks for opportunities and adventure, and just kind of go where something interests me. I don't have everything, but I realize I don't need everything either. Stephen Wright once said, you can't have everything. Where would you put it? I love that quote. Most of what I do have or care about adds value to my life or others, and aligns with what I believe is important. Some examples of this would be my family. Yeah, that includes my cats. Buying secondhand furniture and inexpensive clothing, which is sometimes secondhand too. I also tend to buy in bulk, which just makes sense for certain items, right? I own a Tesla, and the Tesla to me was a good buy. One, I feel good. I feel like I'm doing something good for the environment. I feel like it's the future direction for the automotive industry, and it's in line with my values and priorities. By focusing on the things of value for me, this also frees up funds for other things like travel and other experiences, taking time off to build this podcast, supporting charitable causes that I think could use a helping hand. So having the ability to contribute like that to myself and to others, I don't know, it's important to me. So again, you find what's important to you and you rally around it, and bring what you own in line with your value set. In closing, here's a few tips. Credit cards are awesome. So you can get burned. It's kind of like playing in the Forex market. You can get burned, but you can also play them to your advantage. So you can use a credit card to establish and build credit simply by making payments on it on a monthly basis, right? So the way I've used credit cards, like I said, my credit score was dismal for a period of my life. And since credit scores affect so many things, I realized I needed to make some changes. So what I started doing is I began charging all of my monthly expenses to my credit card. So rent, a lot of places you can charge your rent. That could include insurance payments, utility bills, cell phone bills, streaming services, anything that's a static monthly expense. That's kind of what I refer to that, because it's a monthly payment. You know you're going to have to make it, and you know what the amount is. As long as it doesn't exceed your credit limit, I charged everything that I could to my credit card every month. I still do this. And then I just simply have one bill a month to pay, and that's pay the credit card bill. Made my life a lot simpler. Also, it takes the fear out of if a charge that you're not ready for hits your bank account, then of course you've got the bounce check fees, and those tend to, where one pops up, another one might pop up, and so on and so forth, until you have way overdrawn your account and the bank closes you down, and then you just kind of feel bad for a long time. You can avoid that. Just let it hit your credit card, but the trick is pay that credit card off monthly. My daughter followed that advice while she was in college, and when she got out of college, she was able to sign a note for a car loan without a cosigner, which I was ecstatic about. So, okay. Also, keep some cash in your investment accounts, simply for liquidity, right? I call that kind of nearline. It's an IT thing. But the idea is you can transfer that cash back to your bank account if you really need to. but it will take a few days. The nice thing though is that kind of gives you a few days to figure out, is there another way? Can you do something else? Do you really need this? So it kind of opens you up and slows you down a little bit, which I've found to be very helpful. Don't be a slave to trends or marketing or fads or any of that stuff. Just develop your own judgment and style. You know, you're as unique as your DNA. And before I made that comment, I actually researched that a little bit because I wanted to make sure that you really are as unique as your DNA. And I found out that that kind of trips up when you're dealing with an identical twin because they share 100% of the same DNA. Who knew? Anyway, okay, well, I guess identical twin, right? Okay, I got it. All right. So also just stay motivated and tuned in to things going on around you, right? I'm not saying there's an opportunity around every corner. Every day doesn't just light up, but be ready for it, right? You heighten your chance for success when you're prepared and the opportunity comes, right? That's what it's about. It's about positioning and being ready. So we'd like to know, how are you currently working to get control of your time and achieve your goals? Are you playing the markets? Are you investing in yourself? We'd like to hear from you in the comments below. Also, please be sure to connect with us here on Medium, LinkedIn, and Twitter, as we'd like to grow the tribe. As always, thank you so much for joining us.